right, Gameli. I work for a company called Mara. It's based out of Nigeria, where we try to build a blockchain technology and to demystify that, to make sure people don't focus on just cryptocurrencies, right? I know half of you think of what? Cryptocurrency when you think about blockchain, right or wrong? Yeah, so if you look at the news right now for the past, this is just a few months ago, Deutsche Bank yesterday just started applying for digital assets license. MasterCard is into blockchain, Visa is in blockchain, PayPal actually has a way for you to be able to actually trade cryptocurrencies. So what does that mean? Banks are actually getting into blockchain. And we should not take this to be, that's the thing, that we shouldn't be left behind when it comes to such a conversation, because everybody's trying to get into it. If you look at the future of web, we'll have Web 1, which was about read-only, 2, being able to participate in social web. Web 3 allows you to be able to execute as well, where you hardly have a lot of decentralized applications. So yeah, blockchain technology is all about being able to actually get messages authenticated, being able to have a user address corresponds to a public key, there's a private key involved, and those two being able to actually work together to actually have a wallet. So the digital ledger of transactions is decentralized and secure. It uses complex algorithms to be able to make sure that the connection between the two entities is actually a secure transactions. Transactions are grouped into blocks, which are then added to a chain, which actually makes it what we call a blockchain, but I'll explain that a little bit later for you to understand the details. Bitcoin and Ethereum are one of the two which a lot of people know as blockchain, and everybody's trying to build on top of that. Something I've been working on with my team at Mara for the past 6 months right now is actually building on top of Ethereum, which is a little bit more flexible for us to work with for the African continent to build on top of that. Centralized ledgers that we have right now is what a lot of banks have, right or wrong? Bankers? Right? You have control over everything. You have control over customers' data. You have control over exactly how they can actually transact. There's a time when we have all of these fraud issues that are happening, and people are saying they're losing their money, and that's because it's a centralized data. So anybody who is at the back end is able to make changes without anyone knowing. The reason why some people have been losing them, there's a time when I saw an investigation that I was doing, and we realized that people are buying dead people's IDs from the city mortuary and are able to register those dead people's IDs in certain banks in Kenya. I'll not mention which one. See me after this if you want to know which one. Yeah? Hello? Hope none of them is here. And they're registering those IDs for people who are dead. Now, being able to use that as fraudulent transactions, and that is because of our centralized ledgers. Decentralization makes sure that all their nodes, which are computers, have a copy of every single transaction that is happening, and they have to agree to a particular protocol to make sure that the true state of that ledger is actually what has to be gone with. And that protocol is what we call achieving a consensus. A consensus can be in 3 formats, where we look at a proof of work, proof of stake, or delegated proof of stake. Not to go into them right now. And we call the blockchain a trustless system, but the trustless system doesn't mean that it cannot be trusted. It's to basically make sure that that trust is actually based on computers to make that decision rather than humans making that decision. Do you trust each other? Carol, do you trust the person next to you? You don't trust him? Why? You can't trust him, but you only trust him if the 2 of you actually come to consensus saying that the person who is in front of you is actually Dr. Bright, right or wrong. But if the 3rd person disagrees, then that conversation has to be nullified. That means that I am not the person who I am. There's a lot of deep fakes these days, and people have been trying to do that. I've seen a few deep fakes, and Michael will tell you it's becoming a problem. So how can we even identify that the person who is in front of you or you video calling is actually the right person? We have public kind of blockchain networks. So the different kind of blockchain networks, we have public blockchains, we have private blockchains. The public one is open to everybody. So we have the Bitcoin and Ethereum and the likes. Anybody can be able to get a wallet. Anybody can join. Anybody can have to transact on that public blockchain. But we have the private blockchain where it's the closed loop. So IPSL, for example, Pesalink can decide that, you know what, all banks come together and be in our private blockchain, that transactions between us is actually based on trust or trustless system, but we actually have a copy of every single transaction that is going on the chain so that it's not easily compromised. So there are people who get to the private blockchain network, or they have a consortium network where it's a hybrid between private and public. This can actually be applied if you look at the case of hospitals. You get hospital data, and hospital data is being corrupted because somebody who is at the back end is being able to make changes without your knowledge. Somebody's using your data to be able to make changes of something you're not able to talk about. We've just left a panel talking about APIs. And when I'm telling you API security is quite serious, I was able to make change to somebody's insurance details. He was registered but not activated. And I activated him on the system, and he has no idea. He got an OTP, but he doesn't even know why he got the OTP. Does that make sense? InsurTech in the house? Insurance? Yeah. That can happen. On a blockchain network, that would have been nullified because the system that every copy of the database is being known on the chain that somebody initiated a transaction that was not supposed to be done. And that did not come from Bright or James or John or Kamal. Peer-to-peer networks is what actually sets the base of what blockchain networks actually have to be. And that's because it records all the transactions through a complex cryptography network where network participants have their own private keys assigned to each transaction, make sure that they act as the personal digital signature. If that record is altered in any one way or the other, that transaction is actually nullified and cannot be, notification is sent to all other nodes. All other nodes are just computers which have that kind of a private key as well, to be notified that somebody tried to tamper with this transaction. That we should not actually get to move on with that particular conversation. So they don't have a single point of failure, and for you to actually compromise the blockchain network, I'm not saying it's not possible, because there are some hacks that we've seen that I'll talk about soon. You have to hack almost multiple computers. If I was to try to fight you right now, you and I can have that conversation and fight. I might beat you or you might beat me, right or wrong. But if the entire room is supposed to fight me, there is no way that I'll be able to fight unless I'm Flash or Superman or something like that, where I have to beat every single one of you to make sure that none of you get to go to the key at any point in time. Right or wrong? Hello? Are we okay? Lunch is very soon. So just a simple demonstration just to show you exactly how this blockchain network get to work. Somebody requests a transaction, and that transaction is broadcast to the P2P network, telling everybody, hey, there's a new transaction that is going on, and we all want to make sure that this transaction is actually working. The P2P network of nodes validates that transaction and makes sure that the user's status is known, uses the known algorithms, and that gets to be added as a block to the chain. Once it gets to the chain, it gets to make sure that everybody on that particular block gets to have an extra detail of transaction saying, we have verified this transaction, and we can tell that everybody has a copy. Look at the way you all know one, or for those who are not in Kenya, there was a time when somebody sold the same piece of land to like, is it 50 or 100 people in Kiambu? Right? Same piece of land. That particular title deed was used, same thing for just different people given different data. I mean, the same title deed was given to multiple people, and they all thought they owned that piece of land. If that was on a blockchain, that wouldn't have been able to happen. There's somebody who's at the back end who's able to generate new title deeds, 50 of them, and being able to actually give it out. So there are other cases that we can see the use of blockchain in fintechs, where you can have this decreased transaction cost, identity theft issues, global payments can be done, which I want to get to, enhanced regulatory and auditing, makes it easier for anybody to be able to see that. So smart contracts are what is written as a computer program to directly and automatically control the transfer of digital assets between parties of certain conditions. If you look at the fact that if we're to transfer land from me to Michael, I'll have to actually get a lawyer, have to get other parties involved, go to the lands registry. Somebody has to say that this is actually that contract which has to go on, and after we agree to exchange the money that I've paid you for the land and have paid all the other dues, is when we can actually get to do it. Now, computer code can actually be used to be able to actually to enforce that smart contract. So we are replacing humans with computers, which is a good thing. So for example, if Tom wants to send money to Victor, and Tom uses blockchain as a platform to be able to execute that entire transaction, That transaction is recorded in the blockchain, and every party in the network gets to know, be notified of that transaction. Once that is approved, that I want to send money from one person to the other, or Tom to Victor, that wallet is initialized, and online transfer of money happens, and Victor gets the money. That's what is happening in the cryptocurrency space. So I want to talk about stable coins, which there's a lot of stable coins that are available right now. We all know the volatility of a lot of cryptocurrencies that we don't want to go with. This time is moving so fast. And I'll get to finish soon. But what the stable coins is that we're trying to match $1 to, a fiat currency that we all know, the US dollar, to one cryptocurrency. Well, the pros and cons is the fact that some other other cryptocurrency payment that are out there, some of them have a volatility issue, but also has a very good, some of the pros are for the fact that they're faster transactions, payment gateway for newcomers is simpler to get them on board. But one stable coin that I want to talk about is Circle. So Circle Payment API actually exists, a secure API that allows you to be able to make transactions, where you can set up to be able to make transactions between two entities seamlessly without having too many, integrations applying to that. You'll get the presentation so you can go to those details. So card payments can be done. You can actually connect that to a banking account that you have already and be able to get to make sure that you can transact safely on that. It has various modes of payments. There's USDC, there's Euro, there's CBT, there's Ethereum as well, and also there are various payouts that can be used. And there are more details for you to read about Circle API, so I left those links there for you to read more. Mara, where I work, we try to have something called an OTC desk for you to be able to become a custodian of large transactions. If you want to look at it, you can look at the Mara OTC, which allows you to be able to say that I want to get people to pay me through crypto, but I want to withdraw them on fiat. We can actually be able to give you that cash easily. So asset trading, wallet as a service in Nigeria, that is actually working pretty fast. I think in Kenya, we're waiting for the regulatory process to be able to be stabilized before we can introduce it in Kenya. And when it comes to cybersecurity, I'll not go too much into it, but blockchain is a back-end technology. We need to actually take that into consideration because I think a lot of people are looking for an interface. There's still a long way before we can actually have a fully Web3 interface that is out there. For now, a lot of conversations or details of that, what can be done, or smart contracts are supposed to be written for back end. So when they say not your keys, not your crypto, is because if somebody steals your keys, they definitely become, if you don't have your private key with you, just know that your crypto is gone. Various ways of getting to being hacked, I'm not going to go through them, but the easiest that we've seen a lot, which is rug pull. A lot of rug pull has been happening. People have been told about 2.5 months ago, 17 Kenyans were lied to actually invest in a crypto trading platform where they thought they were actually trading. The minimum amount one person has put in was 1 million Kenya shillings. Some people have put in 4 million, 5 million, 3 million, and guess what? It was a simple JavaScript page which died after they've all put in the cash. That's a rug pull. It has been happening in Kenya for so long, and a lot more people have been coming. Via social media, similar thing. This is actually me. Somebody tried to do this to me, and I took a screenshot of the two. They told me they want to give me some crypto key, some USDC, but they actually just basically copied Circle's page and made it look at the same. So everything Circle posts, they post as well. And so I registered a new fake wallet on MetaMask, and I tried to see how far it goes. I ended up hacking them back just to be sure that they're actually fake, and they tried to actually steal my keys. I gave them a fake key, as my seed phrase, which is basically my 2FA, to just see how far it goes. I ended up sending them a fake link, which they actually clicked on, and I realized these are just a normal, normal transactions that are happening, and these are scammers out there who gets to do that. So when it comes to blockchain security, which as I end up, security penetration testing of this APIs has to be done. Threat modeling has to integrate into various blockchain because the hacks can also still happen. We are not fully integrated into blockchain yet. We have to make sure that we are still careful about it and active monitoring of those networks to say. So with that, I'll say thank you very much, and it's been a very short 15 minutes. Thank you so much.